Welcome, everyone. We're going to present on First Republic Bank. I have here with me Brianna, Bryce, Cuong, Austin, and myself. Next slide. We're going to give you a first little outline on First Republic Bank, going with the history, products and services, COVID-19 response, financial highlights, DuPont analysis, how to get started, share repurchase, info, dividend policy, and our future outlook. Next slide, please. All right, so little history on First Republic Bank. It was founded in 1985 by Jim Herbert. He's currently the chairman and CEO. It was founded on the belief that a truly differentiated culture devoted to exceptional client service would result in a very successful banking business. It is currently headquartered in San Francisco. Just recently in 2020, they celebrated 35 years, and they went from one of the smallest banks out of 14,000 to one of the 14th largest banks in the United States. Next slide. So some of the products and services that they have high quality loans, such as single family, multifamily, commercial real estate, business loans, and many others. Their deposits include checking accounts, savings, money market, certificate of deposits, as well as other accounts as well. And then for their private wealth management group, they have their Eagle Invest account, which is their investment account, a retirement account, foreign exchange account, as well as a trust account and other accounts as well. Next slide. And as far as the COVID-19 response goes that happened and currently ongoing, even though it has been devastating to our overall health, they have been continuing to serve our domestic and global economy. First Republic Bank has ensured employee safety by working remotely throughout this time, as well as making loan modifications have been made for borrowers who have been experiencing financial difficulties. And these include, but not only just small business and mortgage loans, but many other loans as well. And from there, I'll hand it over to Cuong.
Thank you, Chris. Here we have a chart of the return on equity for both First Republic and their main competitor, SVB Financial Group. First Republic is going to be the blue line and SVB Financial Group is going to be the orange line. Here we see that SVB's return on equity is rather stagnant or stable compared to SVB Financial Group, and we're going to figure out why. Next slide. All right, now we have the profit margin for both groups again. Here we see that once again, First Republic is rather stable. They declined up until the pandemic, but they're slowly increasing from 2019 to 2020. Whereas SVB actually shoots up starting from 2018 and remains ahead up to this current date, but they are on the decline compared to First Republic. Next slide. And now is the asset turnover. So interestingly enough, here both groups share similar shapes within their asset turnover over the past 5 years. However, SVB Financial Group's asset turnover is a bit steeper at every single point in time. This suggests that SVB Financial Group is probably a bit more volatile compared to First Republic. Next slide. And now the financial leverage. So earlier when we saw that the return on equity for SVB Financial Group shot up from 2018 to 2020, we now see that using the financial leverage ratio that they did not increase their debt. Therefore, the value that was added on the return on equity is not due to debt, which is a good thing. That means the group is not increasing their risk to get those returns. There is a large spike in leverage from 2019 to 2020 for SVB Financial Group, possibly due to the pandemic. They're trying to increase the returns in order to make up for the pandemic. Once again, we see First Republic's ratios remaining relatively stable throughout all 5 years, even during the pandemic. Next slide. And so now we return back to the return on equity. So now we see that SVB is outperforming First Republic on all fronts. However, you can tell that SVB is more volatile on every single ratio. So during a pandemic, you would expect SVB to do worse. However, when we check back on the return on equity graph, we see that even during the pandemic starting from 2019 to 2020, the return on equity of First Republic's competitor still remains ahead. However, it's declining at a sharper rate than First Republic. And so despite being in a recession, FRC is below its main competitors on return on equity by about 5%, despite only having a lower leverage ratio, about 1.5%. So yeah, First Republic is being outperformed by their main competitor on nearly all fronts from 2018 onwards. And now I'll pass it on to Brianna.
So during our research, we saw the share repurchase information and dividend policy, and what came up is that First Republic Bank has never repurchased any of their common stock since their inception in July of 2010. However, any proposed stock repurchases are evaluated by the FDIC to ensure safe and sound practices. FRC currently has 1.54 million shares of outstanding preferred stock and 174 million shares of outstanding common stock. They also hold what is called depository shares, which represent 1/40th the ownership of preferred stock and are higher than common stockholders. Dividends must be paid in full to preferred stockholders before common stockholders, including holders of depository shares. FRC has several series of preferred stock, each with its own redemption date. Recently, on February 8th of this year, FRC announced the redemption of all Series G preferred stock. They had 6 million shares issued and outstanding, and they redeemed the shares for $25 per share on March 30th for a total of $150 million. FRC's dividend policy is impacted by what is called the capital conservation buffer. It's a requirement under the Basel III capital rules, which basically a bank must maintain at least 2.5% of its risk-weighted assets as a buffer to absorb any losses during times of economic stress. This buffer can affect how much of a dividend FRC pays to its stockholders or if they will pay dividends at all. Next slide, please. So this chart is a graphical representation of FRC's dividends per share of common stock. As you can see, over the past 5 years, their dividends per share has increased to 79 cents from 63, which is a 25% increase. And then next slide, please. And then go ahead and take it away, Bryce.
Thank you, Brianna. So I'll be talking about some of their fintech moves. Right now, they're looking to just improve their mobile network and their accessibility to customers. So First Republic, they offer their clients the convenience and flexibility of mobile banking from a smartphone or tablet. They can manage accounts whenever it suits them or wherever they're in the world. They can quickly sign in using the fingerprint or Face ID, so they have that available to their customers. They can add other accounts from other financial institutions that their customers are part of, so they can see a bigger picture of all their finances, which is great. They can connect with their First Republic team. So if they're working with any, home loans or anything like that with a person at First Republic, they can directly talk to them through the mobile app. So the connectivity is still there. They can manage their debit cards on the app, stay informed when their card is being used. They have mobile check deposit, so you can, deposit your check straight from home from your mobile device. You can transfer funds from one account to another financial institution. And they also apply bill pay as well as e-bill on their mobile tech. So that's what their concentration is for fintech right now. And for risk management, they have 8 core risks that they are looking into. So they are liquidate, market interest rate, credit, operational, regulatory, fiduciary, and suitability, reputational, and strategic. Their top 3 that they really, are looking into are liquidating. So they want to look at their current valuations and any hypothetical long-term growth potential. Market interest rate is the second, and then credit is their third. They have a risk management committee charter. So they meet to discuss strategies and policies that are established by the management team to identify and assess all the core risks that the bank is facing in that moment. The committee assists the board and other committees that oversee specific risk-related issues and serve as a resource to the management as well. So yeah, that's risk management for them. And I'm going to pass it on to Austin now.
All right, thank you, Bryce. So I'm going to touch on the future outlook, but first I want to go over some of the results for the 2021 first quarter for First Republic. So they had a very strong start to 21 despite COVID-19. They had growth in loans, deposits, and their wealth management assets. Even during COVID-19, since 1985, year over year, they've experienced growth in many of their sectors. 24% in loans, 30% for deposits, and then wealth management was up 59%. So overall, pretty substantial increases. Quarterly dividends also rose by 10% to 22 cents per share for common share. First Republic has continued to invest in their employees as well. So now their minimum wage has gone from $25 to $30, which is pretty major. And there's even more growth in this area expected for the future years coming. And then the total equity for First Republic for the company rose by 25%. And that's basically driven by one of their core foundations is having exceptional clients, and they focus on credit as one of their top priorities for their clients. Next slide, please. So the results for quarter one for 2021 is what they expect to see more of for the remainder of this year and the years coming. So we've seen recently green shoots of recovery, coinciding with vaccines rolling out and more reopenings happening across the country. For First Republic Bank, the balances that they've seen for their personal and their business accounts alike are both up for all age ranges. So that's good news for them. Also, the investment management research team at First Republic has done their analysis of the economy and forecasts that the bank is going to continue to see even larger deposits and more loans lent out, and higher spending numbers as we continue to reopen. And then also affecting the bank, along with maybe their financial institution, the GDP, consumer spending, and investments are expected to grow. Inflation rate could see a rise for a little bit, but unemployment is expected to continue to decrease. And then global monetary policy landscape looks like it's going to remain unchanged. And that means interest rates and government bonds should remain at historic lows for now. And of course, the bank expects to attract more clientele during this year and the foreseeable future. And then for our closing remarks as a team, a recommendation for the company: if you currently hold shares of First Republic, we recommend that if you currently own shares, we recommend that you hold those shares. But if you do not own any shares of the bank, we recommend it's not a buy at this time. And that's it. Thank you.